Hi everyone, this is Pete here. So we're going to continue our daily market charts. Now, once again, I'm doing this not just for our premium members, but also I wanted to release this out to the public to really help everyone out there who is currently trying to navigate the market and not quite sure what to do. Now, I want to just share that I'm just sharing the charts and then talk about what I'm doing. This is not an investment advice. Those of you who are in the membership, you know this very well. And at the end, I'm going to share a bit about how I view this whole coronavirus affecting the economy, and we'll see where we take us. Okay, so this is the 10th of March. Yesterday, the US stock market had a very big drop. All right, in fact, it was a 7% drop, triggering the circuit breakers in the US stock market. Therefore, the stock market kind of stopped trading for a short while. All right, they kind of freeze the market for 15 minutes. If it were to break to the next level and then it will break another 15 minutes, and if it were to drop to 20%, what's going to happen is that they're going to stop trading the whole day. So the good news is that we didn't hit the 20%, but we did drop quite significantly. All right, so it seems like the bear market is upon us. However, almost there, but not quite yet. So let's take a look at what do I mean. Okay, so this is the S&P 500. Now, why is it not quite there yet? Because the current drop, all right, is about 19.47%. Now, strictly speaking, a full-on bear market comes on about a drop of 20%. So now we are still not there yet. But I do foresee in the next few days we might enter that region. Okay, and the S&P 500, now looking at moving averages, is looking very bearish. It is now actually at the end of the what we call the Bollinger Band, and there's a very strong support level here. So what I kind of predict that it will happen is that we will see a little bounce like this in the past, all right, when it's so stretched, all right, when the price drops so fast, what happens is like a rubber band, all right, when you stretch it very much, it will actually bounce back up again. So when you stretch like this, it will bounce back up. Likely we will see a little jump here. So let me use a pencil to show you. Okay, likely what we'll see is maybe like this. Okay, so we're not too sure yet. If that happens, what I will do is I will use it to really offload some of my long positions. Okay, I'll talk about that later on. All right, looking at Dow Jones, similar picture. In fact, Dow Jones look really bad over here. You can see that the moving averages is starting to cross over below the 200 moving average, so that is not a good news. Dow Jones dropped about 7.7%. Just to have a look, Nasdaq dropped, S&P dropped about 7.6. Nasdaq dropped about 7.29. Now, Nasdaq actually is one of the healthier performer right now, right? It just went below the 200 moving average. Now the crossover just happened here, so Nasdaq is still looking the healthiest out of the three, but to be honest, it's just which one looks worse. Okay, Hong Kong. Unfortunately, Hong Kong has broken through this support line that I've drawn earlier. Right now is at the new support level, which is here. So Hong Kong don't look too good as well. Shanghai still looking the best lot of all. Likely because the coronavirus situation there is already kind of factored into the market. Okay, the market kind of already slowed down already. So currently Shanghai still looks very healthy. Okay, so the bear market is almost here. I've been talking to you guys who are in the membership that, things don't look good. If you have any long positions, short-term ones, try to get out. The very long-term ones, you want to make sure that you are able to hold them through this crisis if you really want to hold on. If you're someone who really cannot stand seeing red in your portfolio, right, don't test yourself any further. Right now may be a good time for you to just sell first and then wait for the market to calm down before you re-enter. Okay, so I'm just sharing what I'm doing. For me, I'm exiting most of my long position other than the super long-term ones, which are usually shares. Okay, I'm buying more downside protection, so I'm betting for the market to go down and then I will make more money out of that one. And then when the market recovers, I'll use that cash to really go into very strong companies. So I'm building a watch list of very, very strong companies because great companies are the ones that will recover the fastest. In fact, I'm also looking at companies that, hey, with this whole coronavirus, they may not be that seriously affected. In fact, it might be beneficial for them, right? To give you a quick example, for example, household items like Johnson & Johnson. The truth is, when it comes to coronavirus, actually maybe people are sweeping all these products off the shelf. So it might be better news for these companies, okay? So these are just examples of companies I'm looking out for. Next thing, I'm shoring up more cash. So I'm trying to liquidate my other asset. In fact, I'm just sharing with some of my students that I'm actually looking at selling my current place, right? Because if this is the real bear market, I want to be able to capitalize it as much as possible. When the market is at an all-time low, I want to jump in because this will be the time that you really make your riches. Okay, the last time we saw a bear market was about 12 years ago. I'm not going to wait another 12 years. So I'm looking at shoring up more cash as I go. The next thing is part of shoring up more cash is just basically saving up as much as you can. Okay, so I'll give you a quick example. This is my phone. I'm not sure if you can see that it's actually cracked. So what happened was I was jogging and I dropped my phone, so my screen cracked, but I'm very reluctant to change it now. Why? Because if I were to change to a latest phone, it would probably cost me about $1,200 to $1,600. But I know that this $1,200 to $1,600, if I were to invest it in the correct companies, the good companies during a bear market, it will turn into $10,000 in years to come. So I'm very reluctant to buy a new phone for $10,000. So this is the way I'm helping myself to save more money at this period of time, all right? Even with a cracked phone, I'm pushing on, okay? So, enough about the market. I want to give you some more thoughts about the coronavirus and how it affects the economy. Now, I want to say that I have quite a pessimistic view. I hope I'm wrong, but let's look at the numbers. Now, caveat is that I'm not a doctor, I'm not an epidemiologist, I'm not a virologist, I'm not a scientist. Okay? So what I do professionally as a full-time investor is I try to make sense of the market situation, and this is me making sense. Okay? So I look at this, and this is coming from the internet, right? I look at this as a total cases of coronavirus infection outside of China. Now, why outside of China is because, firstly, I don't know whether I can trust the China numbers, all right? Secondly, China has taken very drastic measures to contain the whole outbreak, which is shut down cities, which I think is very unlikely to happen outside of China, all right? Simply because of human rights issue and people are not going to obey such orders, okay? So we are looking at in the last, right, just 2 weeks, right, an exponential growth of total infected cases, all right, from less than 10,000 to right now we are close to 30,000. All right, look at it. This was February 25th, and now we are just at 9, 10 of March, and we are almost at 30K. So this is what we call an exponential graph. All right, an exponential graph is like it will double or maybe grow at a speed that is very hard for our mind to imagine. All right, so this is in a linear scale, but if I were to put it into a logarithmic scale, right? So this might be hard to understand, but please try anyway. Okay. This is how it will look like when it's on the logarithmic scale. Now, what is a logarithmic scale? A logarithmic scale means this. Every time I jump from one level to the other level is no longer a linear up. All right, it is 10 times more. Can you see that? It is 10 cases, 100, 1,000, 10,000, 100,000. Okay, and this is logarithmic. Now, can you see that when it's in logarithmic, it's very straight. It is very, very nice, all right? It's going straight up. So what does this mean? This means that the cases outside of China is going to explode if we continue down this path, all right? Now, there's a very cool video on YouTube that talks about this. You can go and search. It's called 3 Blue and 1 Brown, all right? Sounds funny, but this is the picture I got from there, all right? So just now you saw this logarithmic scale, right? This is when it's on a smaller scale. So on average, the cases are increasing by 10 times every 16 days right now. And if we continue on this path, what's going to happen is at the 81st day, the infected cases, because of this exponential nature, is going to hit 1 billion cases. Now, I'm not saying that we'll definitely reach there, okay, because this is just projection, all right? The line may not extend all the way straight like that, all right? It may taper off maybe at the 1 million level or 100K level if we control it well. But what I'm saying is, if we are continuing down this track and countries are not taking enough measures, we may see a potential for 1 billion infected cases in just 81 days. This is the power of this coronavirus, all right? It is not the death cases that I'm worried about, all right? 2 to 3%. Now, I'm not saying that dying is a bad thing, but 2 to 3% is not the worst case scenario. What is the worst thing about this disease is that it actually gets a lot of people sick. Very sick. Now, how sick? about 10% of the infected cases gets very sick. Now, when I say very sick, you are not just having a flu staying at home. You are literally at acute wards. You are at ICU where you need intensive care. All right. So, what does this mean? If you look at 1 billion cases, what is 10% of 1 billion cases? It's 100 million. All right. But let's don't go there first. But even at a very small number, what I believe is that hospital will get overwhelmed very fast. Very, very fast. Okay? Now, let's say the infected cases doesn't get to 1 billion. Just 10 million will do. Just 10 million will do. 10% of that will be 1 million ICU beds. Now, I'm not sure about the rest of the country, but in United States, they only have about 90,000 ICU beds. Okay? So really, the worst thing about this disease is not about the death cases, it's really about the high level of people getting very sick, having a respiratory problem that needs intensive care. Okay, so I foresee there will be a shortage of medical resources, hospital. By then, they will be forced to treat only the very, very ill. And what happens is they may need to send those who are mildly ill home, all right, to sort of stay home and self-quarantine due to the lack of quarantine facilities, okay? However, people may not observe this stay-home order very well, all right? In Singapore, we have already seen cases where people violate the stay-home order and thus making the virus spread even faster, okay? So this is the number I got from the internet. Currently, the infected cases is about 46,000, but really the seriously ill critical cases is close to 12%. I'm even giving a lower number just to be conservative. But when the infected cases gets large to about 1 million, 10 million, no matter how small the percentage is, it will going to overwhelm the hospital. Okay? So what does this mean economically? All right, I'm not going to talk about the medical part. I'm not qualified. I'm not a scientist. I'm not a doctor. I'm just going to talk about the economic cost. All right, and the economic cost is going to be very, very high. Why? Because there are two ways you can control this issue or this virus right now. Firstly, you can do it like a China, where you shut down cities, and it seems to be working. However, it's very unlikely this will happen in US. Okay, or you can't shut down cities, but what you do is you implement very strict social distancing to keep the economy running, but maybe at a slower pace. Now, what are strict social distancing? You forbid even small scale gatherings, all right? You cancel large events, expo, any exhibition, business, all right, all cancel. This will really cause the consumer confidence to plummet, okay? So either way, either you do it like China or you do it like other countries where you don't shut down, you implement social distancing, what's going to happen is that the economic impact is going to be great. It's going to freeze activity, all right? Supply chain is going to be broken. Tourism is going to stop. We are already seeing airlines being affected, cruise liners being affected, and plunging consumer confidence. And when you have that, basically the economy is going to go into a recession. Okay? So that's my take on coronavirus, which is why now, even though the bear market is not upon us yet, my outlook for the market in the next at least half a year is really not that great. All right, that's why for myself and my student, I've been telling them, get ready, stay aside. All right, whatever you're invested, you want to reduce that portion. Whatever you're invested, make sure it's something that you can hold through the whole period. You're able to withstand the rateness. All right. So very quickly, just go a quick disclaimer. Once again, these are my personal thoughts. My full-time job is investing, so my job is to make sense of the market, right? Some of you have emailed me, say, hey, you're pandering fear, you're fear-mongering. Now, if you don't like what you're hearing, this, you can tune out, all right? I'm not forcing you to listen to what I'm saying, but the truth is the numbers and the facts doesn't change yet, all right? I really hope I'm wrong, all right? I could be wrong, and I really hope I'm wrong about the numbers, especially the rate of infection. But no matter what, I don't live on hope. I live on being ready for the market. So, what about you?